On this Finance Friday, we welcome back Dave Schurman of FirstOntario Credit Union for my last Finance Friday with Dave. Dave, don't make me cry.
It's going to be tough.
I know.
15 years.
15 years. It has been 15 years
Yeah,
now.
2008.
Wow. Well, and that's 15 years of incredible financial advice, answering viewers' questions.
Yeah.
By the way, a reminder for all viewers, keep emailing in your questions to Dave. You'll not only get your questions answered, but you also get rewarded.
Perfect.
All right. We've got one here from Emma in Burlington. Emma asks, hi, Dave. She says, hi, Dave. And she asks, you mentioned last week that college students shouldn't carry a balance on their credit cards because it's like a loan with a very high interest rate. But how can a student establish a credit rating if they aren't carrying a balance and making payments?
Well, Emma, that's a great question. I'm glad you paid attention, that you should pay the card off every month. And yes, a credit card is great for a student to establish a credit rating. But here's the deal. Credit card companies, financial institutions have to report every credit facility you have, credit cards, loans, lines of credit, to the credit bureaus every month. They pick a specific day each month. Consumers don't know which day because then they try to manipulate it if they knew the day.
Right.
So chances are the day they report your what you owe on the card, there's going to be a balance. So it's not only the balance that helps establish a credit rating, it's the length of time you have the credit card, they report that. Have you had any missed payments or late payments? They report that. How much you owe in relation to your limit, they report that, and you want to keep that under 40%.
Okay.
So all of those factors go into building your credit score. So Emma, continue to use your card, yes, for convenience and other good reasons, reward points, but pay it off every month without paying any interest.
Okay, next question is from John in Hamilton. John, as a former blackjack dealer, I've seen an increase in student gambling in the casinos and online, especially when student loans or parents' monies arrive. Sad, just an area of financial control that should be acknowledged. And that is sad. And, you know, seeing young people going down that path.
Yeah, and thank you, John. Again, it's not a question, but I thought it was important to,
something to be discussed.
To raise the issue and talk about it for parents, for kids. And you know what I think, Bob? I think it's, you know, we all have smartphones now with apps and games and iPads, and you get these free gambling apps, and they play with free money, with play money.
Yeah, it's almost like a gateway. It's a gateway.
Yeah, they remember their wins, they don't remember the losses, they don't care because it's play money. So then they figure they can, oh, you know what, I can play for real and make some money. But guess what? Casinos weren't built on customers winning. Casinos were built on the house winning.
Right.
So save your money. It's not worth it.
Absolutely.
And thanks for bringing that up, John.
Yeah, for sure. From Heather in Hamilton, Dave, at what point does a 16-year-old with a very small job making minimum wage need to start filing taxes?
Again, great question. And in fact, the federal government gives us all a basic personal exemption. It's about $14,000. So none of us have to pay income tax unless we make $14,000 or more. However, it does make sense. There's no minimum age to file income tax. You know, a 3-year-old could file income tax if they're making money. So the 16-year-old, yes, it makes sense to file income tax because it gets you in that habit of filing every year. It registers you with the CRA. So once you become of age, you'll get the HST, GST rebates. And also, regardless of your income, it'll start to create RRSP contribution room. You're not going to need it now, but it'll come in very handy later.
Okay.
So there's lots of good reasons for a kid even to file income tax.
Okay, here's a good one from Robin in Grimsby. Financial institutions are very prompt at passing along Bank of Canada interest rate increases on loans, mortgages, or lines of credit. But what are their obligations to make the same increases on savings products where the client benefits?
Robin, you're on to financial institutions. The gig is up. The gig is up. But there's no obligations. Financial institutions can raise their rates, drop their rates anytime they want. But generally, Robin's correct. When the Bank of Canada increases their key overnight lending rate, banks are usually really quick to put their loan rates up because that's revenue for them. Okay. They're not quite so quick to drop their savings rates because it costs them.
Exactly.
So they lag for a reason. It helps them make more money.
Yeah. Last one here from Bob in Dundas. Dave, I'm retiring next Thursday. Who the hell is going to support me?
Bob, you know, come on in. Maybe once a week we can meet for coffee and I'll give you some retirement tips.
If you have a financial question or topic you want covered by Dave, email your questions to financefriday@firstontario.com or get in touch through Twitter at finance_Friday. If your question or topic is covered on air, you can win a gift card from a local business in your community. Keep the board up because Dave and I are going to do an awkward hug right now. Oh, no, we're moment's gone.